Hello, how are you? Hopefully you must be doing well. So today video, actually this ticker, what we are trying to analyze is the one of the very new IPOs, and this is the new growth stock. The company name is Livongo Health Inc. LVGO is a ticker name. This is requested by Danny Kim. Uh, the the person is one of our YouTuber. He Danny put a comment on one of my Adobe video. Requested three tickers, right? Two tickers. So I have noted down, and then today I'm going to cover this ticker, and in future videos I'm planning to cover other two, right? So this is the health industry, so I'll try to put my opinion there, so hopefully Danny will like it, and on other community will like it. Thanks Danny for giving me the opportunity to analyze and suggest this talk. Okay, so as you know, from my perspective, I'll usually take go from the business, and then take from the risk and go to the finance, and then see the finance quality, and here, and then try to make the opinion, running the models and try to make the opinion. Here in this case I will try to follow the same cycle, but because this is a very new the company, and as you know, the new company doesn't have any the bottom line and is more on the speculation, so I'll try to see, I'll still try to grab all those from the different angles perspective, and then try to form opinion. Okay, so that's it from what I'll try to cover. So the agenda I have listed here, that's which I have already mentioned. So okay, so let's get started. But before I start, if you are new to the channel, please do subscribe and like the video, right? If either you are new or old, I don't mind. So that's way the Google algorithm will know that and promote this video. Okay, so let's get started. So let's try to understand that this is, we know that okay, this is from the health care sector that this company coming from, right? And this is more like a applied math. So let me take to the 10K directly and try to say more what this company is all about. Okay, now on my screen, let me put myself away so you can see very clearly the whole page. So this is the company itself, try to explain what the business is all about, right? So we are directly getting from the source. So what the company is saying, that what is this about? So Livongo is a pioneering a new category in healthcare. So this is a new category in healthcare, right? Called applied health signal. So these are called applied health signal. What is this? It transforming the management of chronic conditions. So basically it's that's what said. Okay, so we have created a unified platform. So they created certain kind of a platform which we'll see that provides smart cellular connected. So this means they need some kind of a cellular connection, supplies, informed and coaching, right? So basically they provide some kind of informations on that person, right? So that kind of a device or that kind of the data they are providing. So that's their main business so far what I'm getting. And on top of this, they are hiring the data scientists, enablement insight. So they're hiring data scientists who run the model on this data, because they are getting a lot of data, and to assess, okay, then what is happening, then facilitate across to medication across multiple chronic condition to help members lead better lives. So basically then they can the member can lead the better life because they get more insight from the data, and they can suggest, so based on okay what they need to do, what they don't need to do, what is giving bad, and all. So that's what. So two things to note here, this is just providing the signals and data, and this is a very new industry, so this is keep in mind, right? This empower our member to make sustainable behavior changes, right, that led to a better outcome and lower cost. So this is just let them to do some behavior changes. So for example, what I'm getting is, so rather than drinking 2 cups of coffee, let's say drink no cup or totally cut out as well, or drink sugar or no sugar, more like a prescription, but more on the data driven, and they required a suggestion. So that's what my take on it. Other than that, the company provides only on these kind of products, for example diabetes, which is pretty big, hypertension, right, pre-diabetes, and weight management and behavior by run by My Strength. I also read that recently they acquired this My Strength uh, in from their cash FO, but I think the main business is still the diabetes. So one thing I noted here, there is no correlation with the coronavirus and all. So I do believe if the company can do a little bit extra and then go and monitor those coronavirus, because they already have the monitoring system, they have a data science, so why not just read some extra information, right, and come up with a, if that comes out, that's a game changer, but I haven't see that right now here. Okay, so okay, now let's say why is this is so important, right? Even why the person is requested this, because there is a hype in the market, right? If you see the companies, I already bring out on the Yahoo Finance this company ticker and then change it on the monthly basis, right? And if you see here, the stock is just goes up, right? It's just spike. It's like a more like a slide, right, for a kid. It's so spike. So if you see, this is a monthly chart, and if I go back, the stock basically opened somewhere in July 2019 and then around 44, and then it's basically come back to 17th, right? And then this is a monthly, and then it goes back to 28, then come back around 28, 25, and then suddenly it start picking up, right, from February to the February to the March, and then it just goes on and on. So basically, if somebody has invested somewhere here $24, $25, the person already multiplies almost 4.5 or more times, right? It's money. So that's, but right now we can say easily because the stock is up, but it can go down, right? Because this is a volatility. It goes up, it can go in either direction. So right now we are seeing only up, and we need to see whether this rally will make sense or it is just is a momentum. Okay, so let's continue our journey. Okay, so far we have covered we understand the business, and we see why there is why the price is going up, right? See the price history. Okay, so next let's go to what some of the risk which companies bring and its competitors, and then we'll go into the financial as well. So let me take back to the 10K. Okay, so here I'm highlighting some of the risks. There are so many risks there, which is pretty we are okay, but some which is the company itself saying, I just want to highlight that. So they're saying we have a history of net loss and we anticipate increasing expense in the future, and we may not able to achieve or maintain profitability. So the reason for why am I saying, the company is saying as well, although the analysts predict that it will be profitable in by next year or two, but that's just the expectation, right? So why is so? I have just highlighted this point. To date, we have financed our operation principally from the sale of our equity, revenue from the sales of our solution, and incurring our indebtedness. So basically they how they are financing this, so they are issuing new shares, and also that's how they are sustained in the business. So that's how it is, and it's no guarantee that they can achieve the profitability, right? There are some achieve low sale expectations, there are certain risks. One more thing I like to highlight here, this is the pretty important thing which I lightly mentioned when I introduced their business, but here the market for our solution is new and rapidly evolving and increasingly competitive, right? So this doesn't mean this is a new industry. First of all, this is a new industry which is not established, right? Like for example, any new industry, it takes time for people to have a comfort level and bring that. So it's a very costly to come up that. So they need to, it's not established basically, right? So hopefully you understand from that. So this is pretty bad in terms of that. It's the healthcare, and also the second thing, the healthcare in US, basically the main business right now is in US is undergoing significant structural changes, right? So that's another very big problem there, right? Like for example, here in Canada, if they are in Canada, that's a different story, right? Because Canadian healthcare is free, right? So if they come, they launch in Canada their product, I don't know why they didn't launch it, but if they launch diabetes in honestly industry is very big, and the benefit which they get, then it will access to the more people. And I'll give you one more reason on that on the subsequent slides, but that's what I want to highlight. And again, there are few important points which I have highlighted here. Let me go through with you. This one is I already have mentioned. Okay, so the negative publicity concerning our platform and solution applied health signals, right? Or the market as a whole, right? Now they are not only have to care about themselves, but as a market the whole, right? Because the market is new. If our clients and member do not perceive the benefit, right? So it's totally now depend upon the getting the benefit from that solution, that this new industry, right? Then only they can develop, otherwise no. And this is already mentioned up. And this is also, I don't like it. We have very high concentration of revenue from sales to a client that are self-insured. So how many people are honestly are self-insured, right? It's very, maybe some people who are working in very good high profile job, so they're insured, but major, if they can make it affordable and general income, maybe, I don't know their cost structure and all, but if they seems like come down is a lot. Again, they have mentioned some of their competitors. We are in a very competitive industry, which is, I really don't like it. And we fail to compete successfully against our potential competitors, some of whom may have greater resources from us, right? Look at that. Some even have greater resources. So the chances of failure even increase when somebody put like this, right? Our business, financial condition, operation could adversely. Okay, I didn't try all of this competitor, but when I tried they come under the medical devices, right, section. So when I list on the medical devices, I get a big tons of list, right? But I do see this Verta Health Corporations. This is pretty looks like a promising industry. So So right now they're planning to do IPO, but I unable to see their IPO tickers. The one thing I find about this is they're not only diagnosed, but their solution prevent as well. So that kind of a thing we are looking. Maybe I'll try to bring that article to you. Okay, so this is the company, right? So which I'm saying, I saw this article. Seems like it's still not public yet, but this is very, what I'd like to mention here is, look at this. So the Verta Health provides the first treatment to they're providing the treatments, right? Not only just the monitoring. Again, the same diabetes without medication or surgery. This is very good, right? And among enrolled patients in our clinical trial at 1 year, 60% achieved diabetes reversal. That's a way good. If without any medication or surgery, they can have 60% reversal. That's amazing. And 94% of the insulin user has reduced or eliminate the. So this is the game changer, right? Something like this if will come. So maybe this is more like a disruptor than just providing the device. So that's my take on that. Okay. So I haven't seen other industry, but feel free to research it yourself. For me, I think, so we have seen some the risk perspective now, the competitors, the price, and the history. I think this is very important to just come up with the price, right? If you don't understand the whole where we are going and why we are going, because here we are analyzing not from the short-term speculation perspective. We just want to hold and so ensure that it goes as a multi-bagger, right? So we don't have to do. So that's what my point is. So see from the every perspective. So far it's okay. So let's see from the financial. Let's how the financials goes up. So I already covered this. Okay, so this is their financial statements from 2017 to 2019, right? Year ended. These are in thousands, rounded in thousands. So the revenues looks pretty good. It's from 30 million to 68, pretty much is double. And here in 2019 is more than double, right? But at the cost of revenue, it's significantly low, but it's increased as well. The gross profit, it's pretty good. If you can see, it's double, pretty much more than double, and then it's almost like a 3 times of right 40. But apart from increasing the revenue on many times or gross profit, still the company is unable to do. It has a significant amount of loss, right? And loss increases as well. Okay, so that's we can see here very easily. Okay, now let's analyze in terms of the percentage, in terms of the revenue, comparing from 2018 to 19. So the gross profit is around 70% range, where it's increased to 2.9, 72%, which is very good. So that's a very good thing. I like it. But the operating expenses, which includes the research, right? Although the research, if you noticed, it's reduced expenditure from 36% to 29, but the dollar amount of, if I go back to the dollar amount of 170 or 268, is higher, right? So don't get that okay, they are reducing the research. No, but the dollar amount, because the base amount is high, right? So in dollar terms it's high. The sales and marketing, again, it's percentage wise reduced, but they're doing heavily in terms of the marketing, and right, almost 50% before. Sorry, I think this is crazy, right? So maybe that's one of the reasons stock is pumping up, right? And if you go to YouTube, every other person maybe is like, oh, pitching up, okay, this, why the stock is up, I make this and all. So this is like a free marketing as well. General administration, okay, this is that's okay, but again, this is a loss, and the loss is overall, the net loss as compared to the revenue is lower, right? It's 32%, but before it was almost 50%. So that's good from the top line perspective. But if they reduce the sales and marketing, but the problem is, if they reduce the marketing, then they cannot have the customers and all, right? So that's it. Okay, now see from the cash flow perspective. The cash flow perspective is the negative. If I see here from 33 million to almost double negative, which is very bad. One thing, although you can see they issue a lot of diluted shares and increase for the shares, right? Raise the money, right? Which they also mentioned earlier. But one thing I put in the point here on the investing, I'm surprised, right? You see the 182 million they have invested, but but out of this 182 million, 150 million they invest in the purchase of short-term investment. Come on, you are the new company. Rather than building the product and do advancement from that side, why you want to purchase the short-term investments, right? This doesn't make any sense. Although they have the net payment of My Strength acquisition, they acquired something for almost 7.4 or 28, almost 28 million, right? And they have certain 5.2 in terms of software cost, which is pretty high as well, and 2 and blah blah something else. But this stands out to me very as like a blacklist. So that's why I put a highlighted here. I don't want any companies which is new. Come on, invest in yourself, if right, to grow, increase your product, rather than just spending the money in the sales and marketing. If you have more product, how about why not invest something in the coronavirus, so you can have then it will be game changer, right? But okay, so that's my take on it. Okay, let's see the client enrollment, how much they enroll. Maybe some spelling mistake there, apologize for that. Okay, so the client is double, but it's in right, so dollars in thousands, from 413 to 804. These but not that many, right? Enrollment, diabetes members, so these are the members, 222 683 thousands, right? And then these are in the value terms. So on the customer acquisition side, they are okay, they are doing pretty much almost double, so which is a good signal. Okay, now if I see from the chart perspective, the revenue is going up, but I don't like, usually if I see the revenues grows up, I want to see this as a inverse pattern as well, right? Rather than as a net income is net loss is increasing. It should be other way, right? Net loss is also decreasing. So this is also a red flag to me why they cannot do pretty well this manage. So that's the second red flag. The third thing is now this is especially because we cannot run any other model. So what we can do? So right now we only have revenue to play with, right? So from the revenue, the best metrics, what I think is the price over sales. So one is the simple questions maybe for the requesters: how much times of the net revenue you want to pay for that, right? Right now it's 51 times, which is insane. I don't want to pay for any company who is 51 times when it's the same industry is only 1.4 times, right? So you have to make a call from that. And just to clarify that same, if you see the what you think the Amazon, how much Amazon is. So Amazon is only, I think I have, so let's put the Tesla first, right? I think I have put my notes there. I don't recall, but it's not, I think it's around 5 times of its sales as well, right? Which is, but this is quite high, right? In terms of, how about Tesla, right? Tesla, people think, oh, it's crazy and all. It's only almost 12 times. 1 to 12 times. If you think from that, because that's also a game changer, right? If I compare, that's a new segment, electronic vehicles, it's a game, it's not doing any profit just like this, but at least it also has its product out. This, I understand these are totally different category, but if I compare, this is only 11 times. But if I compare with this, it's coming as 51, and for sure that's not ever near to the Tesla, and people don't trust Livongo, at least from what my opinion is. So this is quite high. So my perspective is even like maybe 7 times of its price, it should be enough. So share price should be around 20-25. I don't pay more than that for this share. Okay, let's see from other factors to see. Okay, so in order to make now the opinion, so we have these many things, right? So the industry is new, right? So that's a risk as well. Even that industry need to establish itself. Forget about the stock. Price over sales, I already gave you Tesla comparison. It's insane, showing the slide. Price over book value, right? From the book value perspective, it's 22 times high, which is, you make a call, it's very high. Okay, the good thing is, yeah, we know the revenue and customer is increasing, but do we really need to pay that much high price for that? Petrosky score, I haven't officially used this before, but I use this because it will give us the quality of the earning and other metrics, just high level. If it's 5 or it's higher, but it's come out around 4, so it's not that great from that perspective as well. So we have pretty much so maybe the companies can do well in the, and if, but it still need to be established, and it's very early in the game, where we do see definitely the new players who might be coming and really disrupting, and the bigger player. I'm not sure, maybe it's already the other players are there, but so far I had just compared it with one, and I showed the Yahoo link for that. But other than that, I think for now at this valuation, I don't think is a good buy. Maybe I think the price which goes very high must come as down. If it come down, maybe you can consider it to buy at that price. So that's what my take on it. So let me know how you like it. So if you're new to the video, please do subscribe and definitely give a thumbs up, right? So more people, so Google algorithm will think that is a good video and more people will promote. And if you want like me to cover your stock or your ticker and try to put some opinion, please comment in the comments, right? So thank you, and hopefully see you soon in a new video. Bye for now.